Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 1st, 2022. We'll start today with the sniper trade of the day. So this symbol closed here yesterday. It gapped up to here. That's the gap opening. It sold off as low as this blue line, as high as, and closed at this line. It opened where it closed. It sold off, broke out, and we entered here with a standard risk box. That's the OR3 entry. This standard risk box, the minimum manageable risk box, is 1/10 of a range stat. The range stat is the maximum reasonable intraday move. It's defined as the average range of the last 30 days plus one standard deviation of those ranges. That's what a range stat is. 1/10 of it is our R10, which is a working definition of a minimum manageable risk box. So when we draw this R10, there's 10 of those available above or below, because that's how far it could directionally move and still be a reasonable intraday move. Works against us directly, and we take a 1 hour loss. It's back inside the opening range 3 minutes. It now gives me a high, a low, a lower high, a crossing of the dragon, and a breaking of the PSAR. So I take the short position and I draw the standard risk box. That's a COTA 2 to the short side, checker hold. And I'm looking for it to get back to closing the gap. It had 10 or 15 bars to go, and it didn't. So I go the other direction. I take a fractional win. So we get out here at the PSAR. We capture that little piece. And now I look at this as a swing low, slightly higher low. We're still working with a gap up. So I'm going to treat that as a SSC. This low is so close to that low that it just feels like a SSC to me. Now, 5 bars into this trade, our stop, which was here, I feel on this move, when it closes here, when it gets above that little shelf and closes here, starts moving up, I feel like I can move my stop to here. And that becomes my no lose plus dinner for 2. That's the little wedge that makes all the psychological difference because I'm not going to lose any money on this trade. I think the stop here is too close. It would take a sneeze to get you out, and you would quickly feel like you were being chopped to death. It turns out that the MMRB, the 1/10 of a range stat, worked out to be exactly where the RL10 bottomed out and where the PSAR flip was. And that's, remember, there's still 10 of those available to the upside. So I think that is too close. All right, so we're into this trade. Let's see. Let's slide this over a little bit. Call it the spine of the dragon. At this point, you know, you could just adopt the PSAR. I looked at this as a 1, 2, as a 2R battle drill to the upside. So now instead of just accepting, now see if I let it come all the way back to here, which is a legitimate 1R gain off the first one, I'm losing 2R because I have 2 positions on. So that would be bad. So in this case, I would move my stop to here. And then as soon as I could, look to get my risk out by trying to jump that up into here. So instead of a routine here, I would move it here to lock in that extra piece. And now this is either going to work right away or not. That's how I look at it. It works just fine. Now this is the first place that we notice some weakness on this after the second position is in. We got that little formation, and now this first move down to the edge of the dragon makes the R10 cross the baby dragon. So if that stop, which was right about here, you pick up the move to here to the bottom of the dragon, or you're at the PSAR, either one of those is still fine. I'm not offended if you just took that and said, you know, I got my little piece in. Because your entry was here. So either one of those stops doesn't lose money on the second position. Ooh, talk about finger biting. And now I look at this one and say, you know what? It had a chance to fail. It did not. So if I just keep that stop in, and it gives me this sell off and then resumption, I just went ahead and put a third one on and kept my stop real tight. Because why not? Now, by this time, I could have my stop up around here. Because I've already locked in this much on the third entry, and the second entry is deep in the money. All right, so once again, we're noticing the crossover. If your stop is here, that's pretty good because you've locked in a gain on the third entry. So any exit north of this line here is fine. I'd be happy with that one right there. And we're out. Later in the moment, we're going to get back in with a COT of 2. And this last little re-entry is going to, there's 1 unit of risk, 1, 2. So that's going to give us a +2 on a single position, and it's near the end of the day. So as we look at this one, this is, what is this beautiful, well-behaved treasuries? 20-cent risk box. That's the R10. So if we were just to do a calibrated scale, if this is the 1 unit of risk, and that's about the low of the day, 10 of those boxes stacked up equals a range stat. So that's what it moved today, was basically a range stat once it got moving. So we got -1, we got a scratch, and then this one scored 1, 2, 3, 4, 5. This one scored 1, 2, and that one scored 1. So that's 8. And then this one scored 2. So that's 2 and 8 is 10, -1 is 9. When it makes a range stat day, I'm not surprised if I get 9R. Standard work. Here was the S&P today on, this is SPY on 30-minute charts. This is the 1-day move right here. Opened a little gap down and then just kind of drifted higher. Closed pretty well at 407 and some change. There's our 10-day high. Here's our 5-day box. Still enjoying yesterday's blast above this. That price level is crucial. As long as it stays north of that hump, then this is really still a strong move. And today retained the gains and closed well. So I take today as a positive sign, positive digestion, right? Here's our 10-day look back and 10-day low. There's the key price level of 400. So 418 and 420 are still in play tomorrow. Looking at our daily chart, last 30 days. Here's the 1-day move. Here's our 5-day box. 10 days. 20, 30. There's 30-day low. PSAR is still chugging along northward. To me, this long period of support with the RL10, or it was once resistance, that's what broke through. That's what it broke through yesterday with that gap up. So today's price action maintained that little distance. It maintained that goodness. So this is still a positive site. So it's got to stay above 400 in my view. If it breaks below 400, look out below, and now you can see all the targets on the way down. So that feels like a critical state. What did the sectors look like today? There's our S&P at minus 0.07, basically flat. Tech was a little better at 0.12, not much. Treasuries were strong at plus 3%. That's good. Tesla was flat. And the other broad indexes were worse. There's the S&P again. Russell, emerging markets, and diamonds. But diamonds were worse, but it was only off 0.5%. So not too bad on kind of a holding day. All right, let's look at the sectors and stocks that were worse. S&P minus 0.07. So there's real estate, lithium, Simon Property Group, that's commercial real estate. Staples minus 0.45. Here's the next cluster: blended commodities, finance, biotech, agriculture down to minus 0.65. Brazil and Bitcoin minus 0.8 and minus 1.5. Now it's getting bad. VIX down 1.9. Oil exploration down 2%, bringing up the rear. Clean energy, Ethereum, and uranium down basically 2.5. Alcoa was not able to hold the gains from yesterday. It was down 2%. Texas Instruments and Intel in the chip space, not good. Devon Energy off 0.35. Now, it was better than oil and oil exploration, but still not so good. To the upside, again, there's the S&P, our baseline at minus 0.07. So you had discretionary, Aussie, materials, tech, 0.14. First cluster, lumber, oil, FANGs, Mexico, ARC Genomics up to 0.65. ARC Innovation 1.1, the other lumber 1.2, wheat and precious metals 2.8, marijuana 6.8. Now you have individual companies that were pretty good. Robinhood 2.9, Cliff Natural Resources 2.45, Squarespace 2, Nvidia the strongest chip by far 1.25. We talked about that earlier this week. U.S. Steel 0.87. So the steel companies did pretty good. So our metals with Cliff and U.S. Steel were good. The only weak one was Alcoa, which was off the chart. Apple and PayPal, 0.15, 0.2. Microsoft did not have the follow through that I was anticipating. It slightly underperformed the S&P, but not by much. So the winners continued to win. I think I'm watching these three tomorrow: Cliff, Nvidia, U.S. Steel. Nvidia traded really well today, as we're going to see. Marijuana is probably worth a look at it too. Let's get our boys in here. All right, traders. Here's Satya. So this is Tesla on the 3 minutes. This was the opening 3 minutes. So there's a MMRB. There was a tradable move to the upside. When this breaks, you can be getting that short in here as he did. I don't understand that exit. It didn't even get into the dragon. It didn't give it room, and it's clear downward trend. So stay with it. The reentry, you basically waited until the gain that you were hoping to see was gone, then re-entered. Quick loss, good recovery for 0.3, but there were two opportunities in here, 1 and 2, that would have made this a really nice trade. Um, all right, let's see. All right, here's another Tesla. Oh, I've already seen that one. Here's an Apple. Come on. Stand by. All right, it's not letting me edit the screen. This quick one on Apple. The entry long is reasonable. Good quick scratch. Right where you're marking that up is where we want to be short on that break of the. We talked about that one yesterday. It was a quick move up, a quick fail. The R10 rolls over, crosses the baby dragon, leaves the dragon, hits the PSAR, takes out the VWAP. That is an automatic short. Number one, automatic short. And then you get paid on this one. And then here's the flip side, that we should be long at that orange dot and getting paid. NVIDIA, same thing, although you got paid on the first one. Now you hit it properly. Perfect. Reasonable to take a profit in there. And then that's a pretty good set of 2 re-entries on the long side. I like that one for 3.5. That was nice. Microsoft, you hit that pretty well. First scratch, you're taking that short. Always take that. And then you're getting paid all the way through for 1.7. And then Apple, yeah, I think we just saw that one already. Yeah, we got to hit that stop. All right, let's look at the daily reports. Now let me draw. Fine. Piss me off. I will go to dashboard 1. Sideways quiet, very strong on all the time frames except the longest, and even that's improving. Risk Z is pointing the way up. We have a couple warnings on tech and emerging markets for potential weakness. So if the market begins to roll over tomorrow and tech is weaker, be ready to be short that in a big way. But otherwise, Pfizer, Coke, Microsoft, and Diamonds on the min pains are the closest to their 10-day high. Alcoa is still in a prime condition. If the market is weak and it's worse, crush it on the short side. But if it's starting to gain tomorrow, it is at such a value level that Alcoa is on my priority list. Lots of breakouts, as you can obviously see in the Dow and in the ETF 30s. Their strength, especially in the globals, was there today. no auto framers and only a handful of squeezes. The no Godzillas whatsoever in the S&P 500. It's been going so good. Godzillas, however, inside the cryptos in our tactical symbol set with Bitcoin, Coinbase, and Ethereum. Coinbase is just really the crypto broker, and they are a double quiet on volatility. So those may have put in the bottom for the crypto sell-off from FTX. The one-day movers, there were some big ones today, BAX and ADM, better than 3 sigma in terms of size of moves. The MACD Four Seasons being dominated by the summer and fall. The ones in the summer are the strongest candidates. I really like the move in treasuries today. It's had a stealthy move of 15% off the low. You can see where the strength is right now, broadly in the multi-time frame NDX. These are all your staples: Procter, Coke, Johnson & Johnson, Nike, Pfizer, etc. Everything's looking good to the upside. Expecting one more good day tomorrow on a Friday. Let's see if they're willing to hold that tomorrow. If it's a quiet volatility day, that's a very, very good sign. There's always a possibility of weekend shenanigans, but we're through the Fed, and this feels like tomorrow could